Welcome to InvestEd Central's Market Minute, sponsored by StockCharts.com. Simply the web's best financial charts.
Good morning, everyone. Welcome to January 24th Market Minute. I'm John Hopkins, President of Invested Central. Right now we got the Dow futures down 48, the S&P futures are down 6, and the NASDAQ futures are down 10. Asian markets were higher while European shares were lower this morning. The bulls made a move early on Monday with the S&P getting as high as 1322 before profit-taking kicked in. On the pullback, the S&P got back to 1309 before turning back up again. By day's end, the S&P closed flat. The Fed begins its first day of a two-day meeting, culminating in its interest rate decision tomorrow at 12:30 p.m. Eastern. Apple reports its earnings after the bell, with the market expecting $10.07 per share. Given its visibility and leadership position, expect a significant market reaction. We got the 20-day moving average on the S&P at 1285, the 50-day at 1249, and the 200-day at 1257. We've got support on the S&P at 1285 and resistance now at 1331. Even though the S&P ended flat for the day on Monday, the bulls were able to boast a higher high, which is bullish. But at the same time, we remain overbought. We also see that yields on Treasury bonds continue to rise, showing investors are willing to take on some additional risk. Looking at the TNX, we see the yield on the 10-year Treasury note is rising, and now solidly over both the 20 and 50-day moving averages. In fact, the 20-day is trying to move above the 50-day, something that happened in mid-October, and look what happened to the S&P when that did occur. So we might be due for a pullback in the near term, but if yields continue to rise, we're likely to see equities rise in the future as well. There's still time to sign up for today's Online Trader Series webinar, The January Effect. Get more information and reserve your seat at investedcentral.com/OTS. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.